Alright, good afternoon everybody. Today is Wednesday, the 23rd day of July, 2025. I have some things that I have to go over today that I really want to go over, and some things that hopefully you'll want to hear. If you haven't taken a free trial with us, go to tvtrades.com. It's right here. Just go to tvtrades.com. Hit any one of these orange things, and it's going to bring you down to the bottom to take the free trial down here. Alright. $25 a week, $9 a month, $9.97 a year, whichever you want to do. $9.97 is 30% cheaper than the $25 a week. $90 a month, 20% cheaper than $25 a week. However you want to do it is up to you. I created this thing in here, guys, about the retracement tool. How to use a retracement tool. If you go to targetviewtrades.com, I put it right on the home page, how to use this retracement tool. Okay, it's got step-by-step rules on how to use it. And we're going to go through that to place some trades here in a few minutes. Okay. This is a swing trade tool, right? I brought the swing trade tool out for you guys a couple weeks ago, and I did it slowly to some guys to get some feedback on it. And one of the things that I added to it was these little gray arrows. Now the gray arrows appear before the actual trigger arrow. All right, you see how the gray arrow appears on the up close. If it's going to be before a short trade, it appears on the up close before a short trade, and appears on the down close before the long trade. Okay, and then the actual trigger arrow is gonna close on the other side of the bar. It's gonna be a down close for a short trade and an up close for a long trade. You see, the whole idea behind the swing trade thing is you don't need to have anything else with it. If you were to put the TV trades on, most of these trades are going to trigger opposite the color, because usually they're going to be at the end of a trend. Okay, usually they're going to be at the end of a trend, not the beginning of a trend. That's just the nature of swing trades. You catch it at the beginning and you ride it through. The markets that I have this for right now, you can see them all right over here. In the Telegram channel, when you sign up for the swing trade thing, you're going to be sent an email that looks a lot like, let me just go find one for you. Hang on. Not that. That's the Wednesday trades. We'll get to trading here in just a couple of minutes. Okay, I'm sure I'll be able to place a couple of trades today. But the email that I was talking about that you will get when you sign up for the swing trades looks like this. Okay, I'll bring it over and show you in just a sec. Here it is. Okay, this is what it looks like, right? It says how to get to the Telegram channel. There's a video for it in here, and basically it's just got a little example of how to place the trades. Now, when I created this, I didn't have the little gray things, the little gray arrows letting you know that the next bar might be the trigger bar. Right? I didn't have that at that time, so I added that to give you guys a little bit more advanced notice. Now, one thing you should know about that is that, hang on, I gotta find, it's in here in a browser somewhere. This one, right here. One thing you should know is that you can set alerts for these things, the little gray arrows. The way to set an alert on this for the swing trade thing is you go to alert like this, right? Then whatever symbol you have, you make sure you got the symbol that you want. Go in here to this, choose swing trade, and under here use any alert. Okay. Now, for me, because I'm premium level of TradingView, I get open-ended alerts. If you have less than premium, you get there's a time limit to these alerts, so you're going to have to be cognizant of the time that it's going to expire after like 30 days or something like that, probably. Okay, so you just have to be cognizant of that they will expire. You're just going to have to go and reset them. As far as the message goes, you can come in here and click on this little pencil thing and make the message whatever you want. So like for this one right here, I would say L1, what is it, 25 range? 25, range, TPT, swing trade. Alright, that's what I would, and if I hit create, it's going to create the alert right up here, right there. Okay, so now whenever one of these triggers, it will, in the notification that I have set, this is the one that sends it to our Telegram channel, but you would have to have, you would just check this. If you have notify an app, that means it's gonna pop up on my phone. In the app on my phone, if I have that running, the toast notification is what pops up over here on the side of my screen. The email, obviously, you know what that is, and you can play a sound on your headset or speakers or whatever you want. right? And you set that notification. It's going to carry that notification. If you set up another email, another alert right now, if I were to do one for something else, it would carry that notification forward. The one that I used already, it carries that forward. Okay, just wanted to show you that for setting up the alerts. Now, when I did all or any alert, it's also going to alert when these things pop up. Okay, it'll alert when these things pop up. So those are not the things that you actually trade on. That's telling you that you're going to have a trade possibly on the next bar. It doesn't always happen on the bar before. Like this one right here said possibly on the next bar. That one, that one, that one. They all said the same thing, and it wasn't until this bar right here that you actually got it. And sometimes you're going to get one where it doesn't even give an alert. Occasionally, you'll get one little gray bar where it doesn't have an alert that follows it. But you see, so the question that Melissa just asked me is, do you just rely on the arrows? You just be using the arrows. You don't have to use for this kind of thing. You're not using the mid band. You're not using any of that stuff. You know, the midpoint or any of that stuff. You're not using that. If you do, it's just going to complicate it. You may be able to find something to hone these things in, because not every one is, you know, like this right here. You have one trade there that worked out pretty well. One trade, I mean, every one of these trades worked, right? These 1, 2, 3, 4, 5, 6 of them right here in a row. Even that one. It pulled back quite a bit right here. The stop would have to be up above the bar that you entered on, so that probably would have stopped you out before you got that gap down right there. But, you know, like right here, we have a couple of them right here that didn't work right in a row. You know, I'm sure you guys are going to go and try to find filters and do whatever you normally do to try to narrow those down or limit those. And you know, you're going to do what you're going to do, but it works well if you don't do anything. Okay, this is just what is this? CC? No, that wasn't CCB. That was crude oil. That was crude oil. But this is CCB. This is a stock. Now this is on a 50 range. When you're looking at equities on a 50 range like this, what that means is every bar is 50 cents. Right? If you're looking at equities like GGAL right here, every bar is $1 because it's on a 100 range. The APO, I do it by the size of the dollar value of the actual equity usually is what I'll do it on, and the volatility. But you can see in here, I mean, this is from June right here for this one stock, from June all the way to now. So a month and a half, I had 1, 2, 3 swing trade alerts, and they all worked. You know, every one of them worked. Every one that you see right here worked to some degree. You don't have, unless you have access to it already. I'm almost sure I gave you access to that, or you had to ask for it, is what I said. Send me an email. I mean, you got like 5 emails telling you got to just ask for it. So send me an email saying you want access to it. If you want access to the swing trade tool, eventually I'm going to build it right into the TV trades. Okay. I'm going to add it right into the TV trades. It'll be an input right in here. It'll just be like swing trade at the top, and you check it and it'll work. That's what I'm going to do eventually. But for right now, I'm rolling it out a little at a time, and so it's an actual separate thing right now. Now I don't want to make it a separate thing altogether, because then for everybody I'm going to have to go in there and add them in, and I don't want to do that really. Just right now at the beginning stages of it, you know, if I keep adding to it or making adjustments to it, I don't want to. I don't have to do that 1,000 times. So, if you want access to it, and you're already a subscriber or you're on the free trial, if you just joined the free trial, then I sent you access. I enabled you for this as well. But if you are subscribed already and you don't have access to it, you just have to send me an email. And in the subject line, put swing trade, and in the body, give me your TradingView login ID. Okay, so in the subject line, put swing trade, and in the body, just give me your TradingView login ID. If you're already subscribed and you want access to it, then just do that. Okay, Milesh, do that. I'm pretty sure I already gave it to you anyway. But, alright. So that's the swing trade stuff, okay? Now, I'll just go through every one of them right here really quick. Now, the ones in the actual Telegram channel, let me show you the Telegram channel, okay? In the actual Telegram channel, that's not that one, it's this one. Yeah, here it is. In the actual Telegram channel, there are more than just things that are triggered by this swing trade tool. There's other ones like this right here. 50 range TVT sell. That's not triggered by the swing trade tool. If it doesn't say TVT swing, this right here, it's going to say TVT swing to be using the latest thing. It says TVT swing in it. Alright, There's other things that say TVT sell, TVT buy, but it's gonna say TVT swing. If it doesn't say TVT swing in it, then it's not the latest version. It's using other stuff, and the other stuff is great too. It's not using the very latest version that I just released to everybody. The other stuff is basically just this. It's just gonna be those guys right there. So you would get an alert on this. You would get an alert on this to sell, to buy, to sell, to buy, to sell. But the swing trade stuff happens. It happens a little more frequently, okay, than the other thing. The other thing is not as frequent. All right. Okay, if it says TVT trade swing in Telegram, yeah, I didn't put targets and stops in on this. Okay, I did not put targets and stops in. That's a good point. That's a good point, Wayne. In the Telegram channel, with the ones that don't say TVT swing, a lot of them anyway, I put a target in there for you and a stop in there for you. I didn't do that with the TVT swings. The latest thing, I didn't do that for you. It's a lot of information to put in there, and I think, though some people might like to have something that says, okay, this is what the entry is, and this is where you're going to have for your first target, and your stop would be down below the bar that got you into the trade. I'm just going to tell you that, because you guys are going to be putting it on, once you actually have it, you're going to be putting it on different time frames. The other ones, you don't have access to actually create the other ones. Well, you do, but as far as the Telegram channel goes, nobody knew how those are being created. So I was giving you more information there because you weren't getting it from anywhere else. But with the TVT swing thing, that's a tool that you can apply to whatever time frame you want. And once you apply it to whatever time frame you want, then you can see that your stop is going to be here and your target's going to be up here. Right? I can't give you that information. I got to know. I got to know different things ahead of time, but you're going to be able to apply it to whatever time frame you want to. Like I'm choosing these nice round numbers here, but you don't have to. Like if we go up through some of these other ones, like I was going to start at the bottom and just go through here and say like the MNQ. These are the signals that we've had on the MNQ, right? And the NQ signals will pretty much match this. So you can see these are pretty good signals, right? The ones from today. This is one from this morning, this afternoon, I guess at 12:22, and that ran, with the regular NQ. If we do it on the regular NQ, it's going to have the same thing, right? The regular NQ is here. Here's the NQ. Here it is, right here. Oh, well, this was a different one. Two trades was that NQ one that I just did. It's not that one. Okay, well this is the NQ from today. Alright, but even the NQ from today, if you grabbed it right here at 198, it ran up at the high to 324. So let's just say 125 ticks. Right, 225 ticks. No, 125 ticks. Sorry, 125 ticks. And times $5, that's, what is that, 825, something like that. 725, whatever it is, 625, 125 times 5, $625. That's right. That's $625 with one contract. Or if you got the micro, it's going to be $62.50, right? The stop on that would have been down below here, right? This is on. I'm sorry, that was not. I did the math all wrong on that. I totally did the math wrong on that. Okay, so 198 up to 323. Let me just do that here. I think I did that one. 323 minus 198. Oh, I did it right. 125 times 5, 625. Right, but with those points. Oh, those are points. That's why it's different. Okay, it'd be 125 points times 4 equals that. Okay, so it'd be $2,000. All right, 2,500 times 5. Okay, I was doing points, not ticks. So it's 125 points from here to here. These are 200 tick range bars. Okay, so that would be like $2,500 in that one trade there. And this one here that also was this morning at 320. If you shorted right here at 235, it went all the way down to 146. So that's about 85, I think, right? 235 minus 146 is 89. 89, those are points, times 4 is 356. Now let's say you only get 10% of that. It's 35, right? 35 ticks. 35 times 5. I'll do that times 5 divided by 10. It's $178 even if you only got 10% of that. Okay, so I'm not going to be the one that says this is what you're going to get. You're going to go from here, you're going to sell it there, and you're going to get all of this. You're going to get the whole thing all the way down. That's ridiculous. That's probably not what you're going to do. But if you look at these, and you take this trade here, and if you were this kind of a trader, I'm not, but if you were this kind of a trader, where you took the trade here and you waited until you got your first gray arrow. The gray arrows, remember, happen when it closes at the top, not at the bottom. And you're always going to get a gray arrow before you get a black arrow. You will always get a gray arrow before you get a black arrow. Okay? So, if you took it here, from this one, to your first gray arrow, it would be all the way up here. Where the first gray arrow appeared, it would be all the way up here at the very top. And if you took this one to the first gray arrow, the gray arrow would be right here. Right? That's where you would get the gray arrow, right there. Right? That's not the way that I trade, but if you took this one to the first gray arrow, the gray arrow was right here. You notice you never got a black arrow on that one, but you got the gray arrow right there telling you to get out. Right? That is one way that you can trade that if you want to. Well, why am I using the NQ1 instead of the NQU? I'm using the NQ1, the continuous contract, because whenever the contracts roll, I have to go back in here and change everything. And I forget to do that a lot, so, I'm human. And if I do the N1, you can use the NU. You're not going to be able, if you're trading through TradingView, you're going to have the U contract on. You can't trade on this. But if I use, the question is why I'm using the N1 exclamation point. It's because it's continuous contract. If I use the NQU, oops, that's not it. If I use the NQU 2025 contract, it's going to be the same stuff. Okay, it's the same thing. But that's why I'm using the continuous contract in here, because I don't want to have to go back in and change this thing every time we roll. Okay, that was something that I ran into a year ago. Okay, I got stopped out on what? Got stopped out on what? What one are you talking about? This one right here, Nilesh? Is that what you're talking about? Okay, it depends where you put your stop. If you put your stop like right up above here, then yeah, you got stopped out. Right there, you got stopped out to the tick on that. Right, on this one, if you put your stop right up above it, you didn't get stopped out there. On this one, if you put your stop right down below it, you did get stopped out right there. On this one, if you put your stop right above it, you didn't get stopped out. On this one, you didn't. But for the most part, when a trade triggers, you can usually let it pull back a little bit. You don't have to be right on top of it. And the way that this is probably going to work anyway, because they're swing trades, is you're not going to be right there at your computer when they trigger. You can have this set up so it buzzes you, it makes your alarm go off or whatever it is. This is 1:30 in the morning when this triggered. So you're probably not going to be sitting at your computer right here at 1:30 in the morning. By the time you get to it, it's probably going to pull back up to here. And then you can still put the same risk on, so your stop will be up here somewhere, and you get into the trade. Alright? So the stop should be about the bar size, maybe a little bit bigger than the bar size that you're using is what the stop should be. And the target should be 1.5 times the bar size minimum, I would say. 1.5 times the bar size. And that should be probably where you move your stop to break even too. Right, to get the risk off the trade. Okay, again, for these larger time frames, I don't have anything for you guys to use as a guideline because you guys are going to do what you want to do. But, you're always going to do what you want to do anyway. But I know people like to have a guideline, and for the smaller time frames, the stuff that I do all the time, I can give you that with confidence. With this, I can give you the confidence, the fact that a bar size, the stop, a little bit bigger than the bar size that you're using, whatever that bar size is usually going to keep you in the trade. Okay? And if you have 1.5 times the bar size for your initial target, or a place where you move your stop to break even, that is going to work out some pretty good profit almost all the time. And if you trail your stop and you look at the prior swing high and low, because that's what price is always going to be trying to get to, and you trail your stop and you keep moving things up a little bit like that, because you're going to have opportunities to do that. Then once you start getting 2 or 3 times the bar size in profit, those stop outs are going to be, they're going to be really insignificant to you. And I did this for the regular ones, and I did it for the micros. You can see this is the micro. It's the same stuff right here on the micro. Okay, I just want to make sure you guys see all that, and you can play around with it and go and check it out with different things. But what I didn't put in here was ETFs yet. I didn't put any ETFs in there. But if we just go look at one, like let's get SPY. All right, I should probably put some of those in there on the swing trade thing because it works great with the ETFs. Now the ETFs, they're $600, so you might want to do something that's a little more. Every one of these bars right now is $2. All right, so you might want every bar to be a little bit bigger. Maybe every bar is $5. Okay, and see, usually it's working pretty well. Right here, that would have stopped you out. That would have probably stopped you out. This would have worked okay. This probably would have stopped you out. This would have worked okay. That would have worked okay. This would have worked okay. But that's the ETFs. You can do it with any kind of ETF. Anything that you want to do it with, really. You can throw this thing on. And if you have a bias, like right now everything's pretty bullish. If you have a bias, just you're only taking long trades and only take long trades until we finally get that pullback that's eventually going to happen. Now it's up to you. But I just wanted to point out, the heck is that? Market open, okay. I wanted to point out that you can use it on anything that you want to use it on. All right, I haven't done anything with the Telegram channel, the automated stuff that goes out to the Telegram channel with the ETFs, at least not yet. I have done some equities, but I haven't done all of them. But I mean, I don't know what the NQ looks like right now, but this is the NQ hunt. So every one of these is 500 ticks on the NQ. That's probably not what you're going to do. 200 is a lot. 100 is pretty good. All right, and you can see that it only gives a couple of trades a day when you go to the larger time frames like that. And remember, these are not going to be with the trend. They're usually going to be against the trend. Right? If you go with the TV trades background, usually these are not going to be with the trend. Usually they're going to be against the trend. Okay, because they happen at the end of the trend. That's when you join the swing trade. Okay. Is it a stronger signal if you get the arrow without the small gray arrow first? You're never going to get one without the small gray arrow. The small gray arrow has to happen before the black arrow can. You get a gray arrow without the black arrow, that can happen, but you can't get a black arrow without a gray arrow. But if you're talking about just one gray arrow as opposed to 3 gray arrows, I haven't really done any analysis of that to see if it's a stronger signal if you have a whole bunch of them as opposed to just one of them. I haven't really done any analysis on that. Just off the top of my head, I would say, is it a stronger signal if you get the arrow without a small gray arrow first? Oh, the blue arrow right here. This one right here. That's I left that on. Sorry. That's not part of the swing trade stuff. Okay, this is the swing trade stuff. Okay. The blue arrow, this is all I originally had, was the blue and the red arrows. If I take the swing trade stuff off of there, this is all I originally had was the blue and red arrows. Oops. Yeah, all I originally had was these blue and red arrows when I first started this whole TV trades thing. And the blue and red arrows happen at the beginning of trends. Right? Or right near the beginning of the trend. The swing trade happens usually at a trend change point, but it's a little more sensitive than these are. Okay, so you don't need to have those on. By default, you're only going to have the one blue arrow on. When you first put the TV trades on, you have this one blue arrow on. But you can take all that off. You actually don't even need TV trades at all when you do it in the swing trade thing. You can just shut that off and turn this on. Okay, that's all you need. And so you can see that it works pretty well, right? And a lot of you guys want to do the swing trade stuff. Well, there it is. There it is. These are good indications of times to get in the market, and you're waiting for the bar to close in the direction that you want it to close, right? The black arrow is not going to appear until the bar actually closes. You have an indication the black arrow is probably going to appear when you get a gray arrow. The gray arrow, again, for those of you guys that got in here late, if you're looking for a long opportunity, the gray arrow is going to give you a down close, all right? And then the actual signal is going to come on an up close. And if you're looking for a short opportunity, the gray arrow is going to happen on an up close, and it's going to be followed by the black arrow on a down close. Okay? That's the way that it works. The gray arrow is to give you an indication to let you know that it's coming. And it's not going to happen before every single one, like that one right there didn't. But it's going to let you know that it's coming, and then usually the next arrow, the next bar, if it closes in the right direction, usually the next bar is going to be the trigger for you. But if it doesn't close in the right direction, it's not going to be the right trigger. It's not going to be the next bar. All right, like any one of these, if the bar would have closed up, it probably would have been the trigger. Okay, you see what I mean? That's probably a good clue for you too. If you get one of these and it looks like the bar is going to close down, then that's not going to be a trigger bar. Okay, it's not going to be a trigger bar until it closes in the opposite direction. All right, think of it like this. Let's say you have these things here, and we'll say that this right here, the thing that creates this is like 8 different things that all go down here into the oversold at the same time. Alright, it's 8 different things that all go into the oversold at the same time. But they all go down to get into the oversold. And then maybe one of those things has to come out of the oversold to trigger it. Just one of those things has to come out of the oversold to trigger it, but it has to come out of the oversold, and the only way it's going to come out of the oversold is on an up close. Okay? So think of it like that if you want to. I mean, I know you don't get any indicators with this. I could give you indicators with it, but it'd just be a whole bunch of things on your chart that I really don't want to put there. You know, my whole idea when I created TV trades was to get rid of everything on your chart, so you didn't have a whole bunch of lines all over your chart and all that. You know, I kind of put the lines on when I did the the midpoint stuff, but those are not like moving average type calculated lines. They're lines that are based upon the price action, and they're adjusted based upon the trigger. So it's not like putting a moving average on here, like, you know, if I were to come in here and just grab one of these and stick a moving average on here, you know, wherever, just one of these. You know, it's not like having a moving average on there that a lot of people use. It's not like that. Okay, that is an indicator. Now, alright, I wanted to cover all that stuff with you. Now there's another thing. I asked earlier if any of you guys are using Sierra charts. I don't really want to get into the whole Sierra charts thing too much with you. I do want to try to take a couple trades in here if we can and make a little money. I didn't really push the live trading thing today because I wasn't sure I was going to be able to trade live, because I had a problem with Sierra charts. And if you are using Sierra and using it through StoneX like I do, then you are going to have a problem with it. If you don't have it yet, you're going to have a problem with it. I would suggest not logging off. There's going to be a trade here on gold on a down close. I would suggest not logging off of Sierra. Would a daily bias be a good time to look at the lower time to check the daily bias? Daily, giving you a bias, that's a big time frame to look at a bias with the stuff that we trade on. Oh man, come on man, where is it? Here it is. That's a pretty big time frame, Jerry, to be looking at for the stuff that we trade on. A daily bias, you know, the 30-minute bias is one thing. Maybe maybe even a 15-minute bias if you're gonna be looking at that. I have things built in that you can use, Jerry, that are moving average bias, moving average level biases. Okay, and what that means is you can choose. I'll show you in just a second. I gotta bring something back up here. Here it is. You can choose. Like inside TV trades, you can come in here and put a bias on under inputs. Here's a bias level. You can enable the bias level. And what that means is you're only going to get trades, and with this, it only refers to these arrows right here, the midpoint arrows. Sorry, there's a trade here on the NQ. I want to break even on this. Sorry, I'm going to lock in some profit. I wanted to try to get some trades off in here. There's a trade right here on the NQ. At least I thought there was a second ago. It's not even a valid trade. I kind of messed that one up. But we got 4 ticks locked in on it. And it should get down here. Alright, it just took us out with 4 ticks. That was kind of a mistake. But let me just write it down so I get it back in the future. What I'm talking about, Jerry, the bias thing in here, the way that the bias works in here, in case you guys don't know, or any of you don't know, in the TV trades, it refers to... Let me turn this off for a second. these arrows right here and the mid-trend arrows. Alright, these mid-trend arrows. Now, if I shut the bias off and I turn them on, then you're going to have points like where you would have them going they end up going back and forth against each other pretty quick sometimes. And the idea behind the bias is to give you, like right here, we had a red one followed by a blue one, red one, blue one, red one, blue one, red one. The idea behind the bias, if you turn that on in the TV trades, Jerry, see, if I turn this bias level on right now, it's 233 moving average. If I check that right here, you see how I just got rid of all those blue ones right there? That's because the bias is saying only take shorts below the 233 moving average and only take longs above the 233 moving average. Now I know you don't have a 233 moving average on here, but just picture it like this. If you did not, I'm sorry, not that. Just picture it like this. It's a simple moving average. Okay, moving average simple like this. And the 233 is just a default number that I put in there. You can put whatever you want in there. But that is what this is saying right here. When you enable the bias level, and this number is 233, it's all right here under the eye. It tells you about this. Okay. Same thing here. If you look at the little eye, it gives you information about what every box does. But it's saying below the 233 only give short trades, and above the 233 only give long trades. Okay. You see that? So you only get long trades up here. You don't get any red arrows. You don't get any down arrows at all. All right. And if you turn that bias off, come in here and turn that bias off, then you get down arrows, you get up arrows, you get all kinds of arrows everywhere. Okay. So you can put a bias on that way if you want, Jerry. Okay, I know that's kind of new to you probably, but that is built in. It is built right in there for you, and so you can do that. Alright, now back to this stuff. Let's go back here and see if we have any trades setting up right now, any real trades. I took that one right there, but that was actually, the reason it wasn't a trade is because it didn't come out of the overbought. It did give us 4 ticks in profit, but didn't come out of the overbought. The ES right now, we are in a red background, so we're going to be looking for shorts, but we're below the midpoint, so we're not going to be taking anything there. The Russell right now, a down close on the Russell would be a trade. It's got a high here of 87.5, so you could sell 86.5. This is what it looks like in the DOM, just like this. Okay, selling 86.5 on that. And I think that's still a valid trade so far. As long as the top stays where it is at 87.5, we're in the red, get a down close, it should be a good trade. This is not a trade yet over here on gold, but a minute ago, well, in a few minutes actually, if we get a down close here, it should get down here, hit the midpoint, and get into the oversold. We might have an opportunity there. Alright, back over here on the NQ right now, we need to pull back up, hit the midpoint, get into the overbought. That would give us a short trade. Now I know I'm talking really fast, but all of these rules are written right here. If you go to targetviewtrades.com, all these rules that I'm telling you are written right here. Tells you how to put it on, and then the short trade setup, wait for price to enter the overbought while the background is red. Wait for price to touch the midpoint. Conservative entry is a down close that pulls it out of the overbought and on or below the midpoint. Right? It's going to pull it out of the overbought. I guess I got to add that in there. It's going to do on. It's going to pull it out of the overbought. All right. The aggressive entry, as soon as the price hits the midpoint and it goes into the overbought at the same time, then you enter it exactly at that point. Okay. The Russell still hasn't triggered, and now the Russell changed colors, so I'm going to cancel that order. Here it is right here. I'll just cancel it. Okay, never triggered. There's a chance I'm getting a trade over here right now. There's a chance of getting a trade over here on the NQ. We're almost at a point here on the ES where you could have a trade, right? We're in the red background. We're oversold. We need an up close on this bar that's going to bring it halfway up, and then an up close on the next bar will hit the midpoint. Down close on the bar after that would trigger it. Okay. Over here on the gold, if we get an up close on this bar right now, like that, that is a trade. So what happened there, we have a blue background, you went into the oversold, and right here you came out of the oversold, and you had an up close. So this right here is the trade on gold, right? 4.4 right here. You could have actually gone a little aggressively on that, because the if we go back to those rules that I just showed you right here for a long trade, aggressive entry, enter once price hits the midpoint and enters the oversold simultaneously. Okay, so that's what happened right here. It hit the midpoint right there, closed at the midpoint, and it went into the oversold simultaneously. So you could have entered down there on that one instead of waiting for the up close. Alright, does that make sense? Hang on, I gotta go back over here and look and see if I answered everybody's questions. So far it looks like I answered everybody's questions. Okay, on the ES right now, we're in, this isn't the ES, on the Russell, we're in the overbought, we're pulling back. The ES is actually in the red, and the NQ is in the red. So we're looking for shorts on the NQ and the ES. We're looking for longs on the gold and the Russell right now. Right, and the gold actually did give the long. That's right here. Here it is. Okay. Let me put this always on top. There we go. Alright, so over here you see how this is slanted and this is slanted. That's not what you want to trade off of. You want to have a stable midpoint. Something that's it's flat like this is what you want to have. Okay, this was flat over here when the entry point was there. It was flat on the gold. It got slanted after, but it was flat when it actually happened. Alright, do you guys see that? Does anybody have any questions about that stuff? Hopefully not. Alright. I want to spread this out a little bit. Yeah, I think that big is good. So big. Do always on top on that one. And that one. And that one. Alright. So we have a 15 tick stop on this gold. Alright. Wait and see what it does here, but it hasn't given us anything yet. On the ES, if we get an up close on this bar, on the ES if we get an up close, and on the NQ if we get a down close. So we have the yellow arrow right here suggesting or telling us that we're in the red and we went into the overbought. If we do get an up close here and it goes into the overbought, we'll end up with the yellow arrow on the ES as well. Alright. So that's kind of what we're waiting for now. See if we get that stuff or not. Does anybody have any questions? Do you want to go over any of the swing trade stuff again? I'm happy to go back to that if you want to. Nobody responded when I asked you if any of you use the Sierra DOMs like I use. Because if you do, you should not shut off your Sierra charts until after the 1st. Alright, because you're going to have a problem with it, and you're going to need to switch your data provider for the Sierra charts. Alright, I was using the CQG data, and I had to switch it to Denali data. And it was a hassle figuring out everything that I had to do, but I figured it all out, and I got it all the steps put down for all you guys. Well, this is not looking good over here on the gold. And I got all the steps written down for all you guys, so you don't have to go through all the work that I had to go through. Alright, so you see the background color changed here on the NQ, so now we're looking for a long trade, but we're not going to have one right here anytime soon. Okay. And you know, a while ago I had a $200 day in here. What was it? That was sign in on that. Okay, I believe I'm signed in now. There was this $200 day back here on 5/14. That's where we stand right now. We're up 1 point on the NQ. So I don't know what kind of action we're going to get here. We have better part of an hour left here to get some trades off, so hopefully we'll get some opportunity. But right now we're just not getting it. I don't know if you guys remember it wasn't the last time, but I think it was the time before where I kicked in the div area down there, and I started trading based on that. It's like right now, you would have a short trade right here. The blue went into the overbought. You'd have a short trade right here at the open of that bar. When you're doing those types of trades, the background colors don't mean anything. All that matters is the separation down here. Okay. And I may have to start doing those types of trades because the markets are really slow and because we just stopped out on that gold. So we got minus 15 on the gold. Hang on. I'm trying to put it over here. So it doesn't do that. Alright. Okay, so the gold did stop us out, and that was a good valid trade there on the gold. If I'd have gotten it aggressively at the open right there, we would have had our stop at break even. But I didn't. New question. Sell yes, 63.88, stop limit. You're talking on down close of this, right? Yes, that is one way to do it. Or if you're being aggressive, you could already be short right now. Right, but you're right, Wayne. The down close of this bar right here. Well, that would be, it'd be 88.50 right now is what you'd be selling. 88.50 now. Okay. What info does the red give you on ES? The red, that down there, it gives you the divergence. Alright, unless, you can do it as a line if that helps you. But what you want to see is the blue going into the overbought or the oversold by itself. Alright, you want to see it separated from the red going into the overbought or the oversold by itself. Like this right here, I did actually sell the open of that bar. Yeah, that was here. I'll throw my stop at break even now. After 4 ticks in profit, the stop goes to break even, so my stop's at break even. Now you're looking for the down close. Yeah, the down close should be at right here at 75, and it was. And now so 88.50 is where you would enter the conservative trade. Right, the conservative trade is when it comes out of the overbought, but I'm already in from the aggressive trade. And we'll see where it goes. It should go down to 86.50 right here. I don't know that it's going to go straight down there, but that's where it should go, down to 86.50. So, we'll see. 86.50 is right here. It's got a big number right here at 87. It's got a number down below 86.50, so there's a chance it'll go down there right now. I don't know, we've got 2 ticks locked in on this. We'll see where it goes. Over here, we have red background there, right? We have a red background on everything but the Russell right now. Alright, I'm going to lock in 4 ticks now. Okay, and so over here, I only have the aggressive stuff going on this one, on the ES. Alright. This could possibly be an aggressive trade here on this. It could possibly be. Let me see. If I put the div area on there. It's not. Okay, that's not an aggressive trade there. And I am waiting. 86.50 is what this should go down to. Alright, if we get a down close on this bar, then we should definitely get down to 86.50. Alright, that'd be right down here. And we're almost there. We almost got the down close. Alright, so we don't have anything going on over here. We don't have anything going on here. So we're just waiting. This is what it's been like a lot today. A lot of waiting. How does that appear? You have to turn it on. Delish. In here. It is... But first, you have to make sure you don't have the Optimum trigger on. If you have the Optimum trigger on, you won't be able to turn it on. Okay? But it is the div area right here. Right? That's the red. Okay. And this is for, when the markets are slow, if you want to get a little more aggressive and trade a little more aggressively, then that's when you would turn that on. And when you do use this, nothing else on the chart matters. You're just trading this, right? You're not trading colors up on top. You're not trading, midpoints and all that stuff. You're just trading this. If it goes into the overbought by itself, you sell the open of the next bar. Alright, so I sold the open of that bar and I got filled at 90. And if it goes into the oversold by itself, you buy the open of the next bar. So we haven't had any that have gone into the oversold by themselves yet. But it's having a lot of trouble here getting through this 88 level. I'm tempted to just take 88 if I can get it again. But I think it's building up here. I think it's going to make a big move one way or the other. And if it makes it down, well, I want to take advantage of that. Okay, it should try to get down here as we get closer and closer to the end of the session. It's 3:18 right now. If we look at this on a bigger picture, let's do that really quick. Alright, we might have something here. Well, this is a conservative trade for sure. Over here on the gold, a down close would be a conservative trade for sure, but I'm not sure if we have an aggressive trade there. Yeah, we do have an aggressive trade there too, so you could have aggressively shorted the gold right here at the open. We're going to end up with 4 ticks. Yep, 4 ticks on that. Could have aggressively traded the gold here at the open, or you could now wait for the conservative trade. Alright, the conservative trade, actually I don't think you're going to get it right now. Look at this, you see how the higher is 404.5? The midpoint is right here at 3.5, 3.6. Okay, so this will still work, because you're going to sell 1 tick below that. So it would be 403.5 is what you're going to sell on that gold. Alright, so this will still work for the conservative trade if you get a down close here on the gold. Alright, so we took 4 ticks on this ES trade right here. That's a blue one. Blue one. And the NQ actually needs to get up into the overbought and hit the midpoint. It hasn't done that yet. Okay. We're looking for a pullback here on the Russell. You could actually sell the open of this bar right here. You could have sold the open of that bar on the Russell. If you're being really aggressive, you could have sold the open of that bar on the Russell. Sell it down to the midpoint, and then possibly get a long off the midpoint right there. Okay, the gold gave the trigger right there. This down close, that ended up being just a little bit up above the midpoint. I don't like to trade those when they're a little bit above the midpoint like that. I like to be on it or below it. It actually changed the background color too at the same time. Huh. That is not the ideal trade. Alright, not the ideal trade, because it closed above, well, first of all, the background color changed, and it closed above the midpoint. Alright, so back over here on the NQ, we didn't get into the overbought. Did not get into the overbought on that. Okay. You took the 4 ticks. Yeah, I know, it is really slow. That's why I was doing some of these aggressive trades. Okay, like this aggressive trade here on the gold. That actually went somewhere. The conservative trade, it didn't actually even trigger because the background color changed. And over here on the let me change this down here. Bar color. There we go. We're about to have a background color change here too. Let me change that on all of them. We're about to have a background color change here on the NQ, so you gotta wait for the down close. You can't be proactive with that. You still gotta get into the overbought, which it hasn't done anyway. Alright. So on the ES, we took the 4 ticks in there, and now it doesn't have a trade. And nothing else is really given a trade either here, right now. If you did the aggressive trade here, you weren't waiting for the colors or anything like that. If you did the aggressive trade when it went into the overbought, it'd be the open of this bar right here, and that's gone down a little bit right now. Okay. This did not end up being a trade because this did not get into the overbought. Okay. So we're waiting right now. Waiting. Any questions? Does anybody have any questions right now about any of this stuff? I'm happy to go over more of it. Again, the rules, if you go to Target View Trades, the rules are right here for using the midpoint strategy that I'm using right now. Okay, if you're using this more aggressive strategy, those are not in there. Those are in some other thing a while ago. Alright, now this did not make it into the overbought, so even on the down close here on the NQ, you're not going to end up with a trade. Okay. On the ES, the blue arrow, the blue line is the one we're concerned with down here, not the red one. Okay. Explain the red usage. Okay, let's look at it just in this right here. We'll look at just one thing. And let's get rid of the colors up there. And down here we'll get rid of the retracement levels. Okay, and we'll get rid of the colors. Okay, this is what you're looking at. Let me actually make the other one all blue too. Alright, make this all blue. So you have a blue line and a red line. Okay, so all you're looking for here, Milish, is for the blue to go into the overbought by itself. When it goes into the overbought by itself, you sell the open of the next bar. Alright, that's what I did there, and I took 4 ticks in profit. Alright, when it goes into the oversold by itself, when it's the overbought by itself right here, you would sell the open of the next bar right there. Okay, you don't even just see what price is doing. Right, this is how I used to do this a while ago. When it goes into the overbought by itself, you sell the open of the next bar. When it goes into the oversold by itself, you buy the open of the next bar. So you would have sold that one, and you would have bought that one. Okay, and over here, you would have sold that one. Now, one thing to note, when you get flat spots like this is when you stop out. Alright, so the thing that creates the flat spot is a longer leg length. Okay, so this kind of trading that I'm showing you right here works really well when it's choppy, but it doesn't work well at all when you have a decent trend. When you have good leg lengths, it doesn't work well at all. Alright, so think about it. When price is going up and up and up and up and up and up and up, then this goes up. Well, let's do it over here. When it goes up and up and up and up and up like that, it goes up, and it can only go up so far, right? And then it flattens out at the top. As price continues up, it flattens out at the top. Then you have a really long leg length. Then the return leg length is going to be long too. So the return leg length is going to be a flat spot down here. You don't want to have the flat spots when you're trading like this. You want to do this when it's choppy. When the markets aren't really moving and it's choppy, that's when you want to use this kind of thing. Okay? So, without actually looking at the charts, I drew these things in here where you would take trades, right? Like right here, you would have sold the open of this bar that went down 7 ticks before it came back up, and you would have got it on the next bar anyway. You would have bought the open of this bar that went up. You would have sold, you would have bought the open of this bar right here. You would have sold the open of that bar. You would have sold the open of that bar. And if we go back out here, we were sold the open of that bar, which I did. I took 4 ticks profit. Okay, that's how that works. Alright, so you don't have to pay attention to any of the other stuff. That's all you got to pay attention to. Those things. And that's it. So none of these other ones are giving you any kind of a trade setup right now. Alright. So right now what we got is 4 ticks on the NQ, 4 ticks on the ES, and minus 15 on gold so far. And we have a half an hour left to trade. Uh-oh. Alright. Can you guys still hear me okay? Somebody give me a yes if you can hear me okay, because it just gave me a message. It just gave me a message that you couldn't hear me. Hang on, let me go down here. Oh, I see. Mic is off. There we go. Okay, so now the mic is back on. Sorry about that. It just kind of disconnected my mic there for a second. Alright. So we're getting some movement over here on the gold. We got a red background right now, and there's a chance we could have some sort of a trade going on over there. Over here on the NQ, I can't tell if we have an aggressive trade there or not. We don't. Alright, you see the blue and the black, and the red and the blue went together down there, so that's not an aggressive trade. So we have a chance for a trade here on the NQ. If it goes up and hits the midpoint and closes back down, then we have a chance for a trade there on the NQ. But other than that, we don't. Okay? You guys can hear me alright right now, right? I'm pretty sure you can. Somebody give me a yes if you can. somebody. Okay, thank you. Yeah, I got this message that said, do you want to use your new microphone? I said I didn't know I had a new microphone. Okay. So right now, we're waiting for some chance to trade something. There's a chance to take an aggressive trade here on the Russell. There's a potential for a conservative trade here. See, now the blue should have gone up into the overbought right there. I don't think it printed the blue. Oh yeah, it did. It did. I'm sorry, it did. This arrow right, this line right here is the blue. So a down close here on the NQ right now. You see how it did a blue bar right there? That suggests the background of the next one is going to turn to blue. So you have to wait for the down close. You can't just put your sell stop limit order on right now. You got to wait for the down close because it suggests the background color is going to change on the next bar. You guys see that? When you have a blue on top of a red like that. And let me show you how to make sure you have that right. Right in here under inputs, make sure you don't have any of this checked. And then under here, make sure you have bar color unchecked. If you turn bar color on, it's going to change your bar colors around on you. Make sure that's unchecked. Okay. So right now a down close on this would be a trade right here. It's got a high up there at 95.25, so you'd be selling 90.25, something like that. Okay, you're looking for the down close here on the NQ. The blue and the red went together on this, so I guess I should put everything back on that, huh? I know I took it off because I was showing you the aggressive trade, but let's put it back on there. Okay, get rid of the conservative bars. And put the TV trades back on there for you too. Alright, so is everybody following along pretty well with me here so far? We need the down close here on the NQ. Now you got to make sure on the down close that the background color stays right. Okay, it did, so that's a valid trade right there. That's a valid short on the NQ right there. Okay. Came out of the overbought. We're closed down off the midpoint. Okay, that's the trade you're looking for. Here it is. So 10 ticks in profit, we move the stop to break even. And there it is, stop to break even. Now I'm going to lock in a little bit of profit on this. Okay, when it gets to the swing low right here, Nilesh, you would ask me this before, when it gets to the swing low, I lock in a little bit more because that's when it should find support. It just came up and took me out with one point. But when it gets to the swing low, it should find support and bounce back. Okay. I like it when it goes right through the swing low, but it doesn't always do that. So we just took 4 more ticks on that little guy right there. Now, that right there, you see what just happened right here? You got an aggressive long trade right here with this is, we'll call it the blue, but it went down into the oversold by itself. So you could buy it right here aggressively on the run back up to the midpoint if you really want to trade aggressively. That was a weird noise. I don't know what that noise. Let me know of. It just made some kind of a strange noise. My computer did. Oh. Hey, I know what it was. It was a Facebook thing. Alright. It's a Facebook message, I guess. Yes, possible trade, but the arrow is blue. On the NQ. Yeah, well, it's alright. I know I got 4 ticks on it. I wasn't that aggressive, I don't think, on taking that, but it did get down to the swing low. So it did what it should have done. Alright, yeah, so the down close right here. This last one right here, this is Wayne. This last one didn't make it all the way into the oversold, so this one doesn't really matter on the NQ. Alright, unless you're being aggressive. If you're being aggressive, then you would have been shorting the open of that bar, and you could be buying a down close if you're being aggressive. Okay, but because this one right here, and this is important that you see this. If I get rid of the div area in there, because this one didn't make it into the oversold, or it came out of the overbought, didn't do the full cycle. You don't want to take any other ones in that direction right now. It's got to continue the trend. It's got to prove itself that it's still going to go down before you take another one in that direction. Okay. So there's no trade here on the ES. If anything, being aggressive, being really aggressive, if anything, it might turn into a long trade. If this goes down to the oversold by itself, being aggressive, you'd buy the open of the next bar on the way back up to the midpoint. That's super aggressive. So, for me, there's different levels of aggression, okay? There's like 3, maybe 4 different levels of aggression for me. There's like, the conservative trade is just, wait till it hits a midpoint and goes back in the right direction, comes out of the overbought. That's a conservative trade. One level of aggression is if it lands on the midpoint and it goes into the overbought at the same time. I'll take that almost every time I see it. That's an aggressive trade. That's like the next level of aggression. The one after that is if you get an up close with a blue background and it goes into the overbought at the same time, not right on the midpoint. That's also a level of aggression. It's just a little weaker than when it closes right on the midpoint. Okay, and the final level of aggression is one that I do where you just don't even care about the midpoint. You don't care about any of that stuff. It's just you have this divergence down here. That is really aggressive. Okay. Those are the ways that I do things. Usually I don't flip into a whole bunch of them. If we're in a slow period like this where I want to make some points so I can get profitable, then I might go to the really aggressive one like we have right here right now. Like I kind of get it set up on every one of these charts to do really aggressive trading. None of them are giving us anything, but it is set up to do really aggressive trading on all the charts. Markets are just slow. And they've been a lot this week. Now we have huge news events coming out tomorrow and on Friday we have huge news coming out. Oh, I want to mention to you guys, next week I won't be doing a meeting on Wednesday next week. I'm going to be in Richmond, Virginia. But I'll move it to Thursday next week. So I'll do it on Thursday instead of Wednesday next week, okay? So all those emails that you normally get on Tuesday and Wednesday, you won't get until Wednesday and Thursday next week. Okay. I'll put that in the follow-up email that goes out today. So I'm waiting to see if we get anything here that we can do aggressively or even conservatively, and it's just not happening. Now what's the farthest thing away from a trade? I guess Russell. I don't know, they're all just a couple bars away. The ES is the least likely to give us a couple of bars, but this is an aggressive long trade right here on the ES. Right? Where the blue went into the oversold by itself. That's an aggressive long trade there on the ES. You could trade it right back up to the midpoint. The midpoint is up here at 90. So it would be 8 ticks up to the midpoint. If you want to take that really aggressive trade right there. There's nothing here that you can do here, and nothing here you can do, and nothing over here that you can do. Actually, you could actually take an aggressive short on gold too. I think. No, the red led up there. Not the other way around. Okay, so you can't do the aggressive short there, I guess. Let me make it a line so I can be sure. Okay, let me just make this all blue. That'll do it. There. Okay, yeah, see the blue didn't lead up in there. So that isn't a super aggressive one that you can do. They went together on the Russell, so you can't do anything there. And nothing's hit the midpoint. So the ES is the only aggressive one that you can do right now. And that should work its way up to the midpoint right here, up to 690. That's what it should do. Actually, accidentally did the gold one. I'm just going to put the break even on the gold. Lock in one tick. I won't count it for the total because it was a mistake. But I did kind of screw up and do the gold one. 2 ticks. 3 ticks. 4 ticks. And the ES is starting to work its way up to 90 here. Okay. I'm not going to count those 4 ticks on the gold, but I will start counting these on the ES. And there's 1. You got to be really aggressive with your risk management when you're doing these type of trades. Okay, especially if you're going counter trend like this. 2. 4. And we're out with 4. So now, it didn't move up. I thought it was going to move up. I thought that this was going to get into the overbought on that up close, but it didn't make it. Alright, so the NQ doesn't have anything here, the ES doesn't have anything here, the gold doesn't have anything, and the Russell doesn't have anything. It's slow. Just slow right now. Nilesh, did you understand that? And there was another thing that that somebody wanted me to explain today. I can't remember what it was. Crap. Can't remember what it was. It might have to do with the swing trades. I hope I explained everything to the swing trades to everybody's satisfaction. Good. Okay. These, especially slow days like today, are great times for you guys to ask me questions if you have any. You know, we don't have any trades triggering right here. And right now I think we're about break even on the morning session. We're just over break even on the morning, not on the morning session. This morning, it wasn't great this morning either. It was okay, but it wasn't great. We're up 500 and something this morning, I think. Right. 567 this morning per contract. And right now I believe we're up $10 a contract. No, we're up a little bit. We're up $50 a contract right now. Go with the red thing again. What is the big news tomorrow? And go over the system bar by bar. Okay, which... Alright. Alright, those are fair questions. The NQ has actually got an aggressive long trade right here. That one is oversold by itself. So you'll be long on the NQ on the way back up to the midpoint right here. Alright, your entry point should have been down here. So it's late to do it. If you didn't do it already, it's late to do it. It should have been at 72.75. And already taken some profit on that. Okay. I didn't see it until just now, so I wasn't able to do it. But go over the system bar by bar, how to set up the DOM for auto ATM. You mean how to set up a bracket? Do you use Sierra? That's what you need to tell me in English. Do you use Sierra charts? Or Sierra DOMs? Because I can show you how to do it for Sierra, but I can't show you how to do it for other ones. Okay, then that isn't anything that I can show you. But the system bar by bar, I want to do something that's actually got a trade that triggered. I guess the NQ did here earlier, right? Let's look at this on the NQ. Well, bar by bar. Let me slide this over here like this. Okay. So first, you asked about the red thing, and the big news tomorrow. I have the news. If you go to Target View Trades, Target View Trades, and you go here to Econ News, I have the news in here. So tomorrow, Thursday, this is all the high impact stuff coming out tomorrow. In the pre-market, we have building permits. It's medium impact. Then high impact right here is initial jobless claims tomorrow. Then at 9:45, we have 3 high impact right there. Like S&P Global Manufacturing, S&P Flash, all those Flash things. These used to be high impact in new home sales. They're coming up at 10 o'clock tomorrow. And then tomorrow afternoon, Friday morning, we have durable goods. I thought we had next week we have the employment rate, but we have all this stuff coming out tomorrow. That's Wayne's question. I want to answer Wayne's question first. Okay, now let's go back over here, see if we have any trade. We don't. Okay, so going bar by bar. The thing that you really need to pay attention to, is what's going on down here. Now, I added the div down here. The div is a divergence area. That's a div area. That's what that stands for, divergence area. Okay. So what you're looking for with that is separation between the blue and the red. All right. You want to see the blue lead into the overbought, the oversold. All right. When the blue leads into the overbought or oversold, that's when you take your trade. You can shut everything else off. Everything else can be shut off. If the blue leads into the overbought or oversold without the red, that's where you take your trade. Right? Everything else can be shut off. You don't need to look at anything else. Right? That's how that works. Now, doing the system bar by bar, like you asked, Nilesh, that is a little bit different, but let's go here. Okay. So if I get rid of the divergence down here, let's just get rid of that, the div area, right? Because this is the system bar by bar. Now you're just using this. We don't have any trades coming up anywhere, so let me do this kind of quickly. If you're looking at it bar by bar like this, right? Down here in the trigger is what you need to be concerned with, all right? Because you're never going to get a trade if it doesn't go into the overbought, or if it doesn't go into the oversold, you're never going to get a trade. So while it's going sideways right here, it doesn't really matter, right? And right there, it gets into the oversold. So when it gets into the oversold, you look at the background color. If the background color is red, you don't really care about the oversold, all right? All you care about is the overbought, because you're looking for short trades when the background color is red. Now note the bar color at the same time. All right, if the bar color is red and the background color is red, you're only interested in going into the overbought. You're not interested in the oversold. Right? So it comes out of here, and the next bar, up close, puts you in the overbought. Bar color turned to blue, so you got to be cautious when the bar color returns to blue. All right, you can't put your sell stop limit on, because the next bar, when the bar color is blue on a red background, the next bar could turn the background color on you. So there's just a little caution right there. You see how you got the yellow arrow right here? The yellow arrow means the background color is red and you went into the overbought. That's what it's telling you. Every time you get an arrow, a yellow arrow, it's telling you went into the overbought or the oversold with the background color is right. So it's telling you the next bar could be the trigger. So pay attention. Okay, that's what it's saying. That's what the yellow arrow is for. And that yellow arrow is inside the TV trades right here. Under style, it's the trigger alert notice. This right here. Alright, trigger alert notice. That tells you when the trigger goes into the overbought or the oversold with the right color background. Okay? So bar by bar right now, when it goes into the oversold, what you do is look at the midpoint and see where price is with regard to the midpoint. If it's going to hit the midpoint, or it's going to close on the other side of the midpoint, then you know the next bar could possibly be a trigger. If it's going to hit the midpoint and close right on the midpoint, then this bar could be a trigger. Okay? Then this very bar could be a trigger. And in this case, it did close right on the midpoint, and I think I sold it there at the midpoint. Alright, and then I took 4 ticks in profit. I know Wayne waited for the conservative trade, I think, and he took 4 ticks in profit too. But that's what you're looking for. Alright, that's what you're looking for, right there. Okay, and that turned into a pretty good trade, right? So now you go bar by bar, you're looking for it to get into the overbought, you have a red background, red bar, looking for it to get into the overbought. There it is, red background, red bar, you're in the overbought. You're nowhere near the midpoint though. So you know the next bar isn't going to be the trigger, it could be the one after that. Now you have a blue with a red background, so you want to wait and see what the next bar does. Alright, the next bar could hit the midpoint and give you a down close, but the background color could change. Alright, and that's where we are right now. It's hit the midpoint. If it gives you a down close, that's great, but you don't want to put your sell stop limit order on just yet because the background color could change. See the blue on the red background says the background color could change. That's the information that you get from that little bit right there. So you have to wait for the bar close, and if the bar closes down and the background color, see, it just changed it. If the bar closed down and the background color was still red, you'd have a trade. It didn't close down, it closed up and it turned to blue, so you don't end up with anything there at all. Okay, that was bar by bar, Wayne. I'm sorry, Wayne. That was bar by bar. Nilesh, okay. Well, it depends what you're talking about. If you're talking about the aggressive one that uses the divergence, then it changes things. But doing the mid-trend, the midpoint strategy that I'm just showing you right now, then you have to wait for that. Like right here. This right here on the ES is a trade. Okay, that's a trade on the ES right there. And you had to wait for this to give you the down close and this to come out of the overbought with a red background. Okay, so all the things that we're looking for here, we just got over here on the ES. When we did that bar by bar right here, we're looking for this to hit the midpoint and give a down close with a red background. This did hit the midpoint and gave the down close with a red background. Came out of the overbought at the same time. This one, when it finally came out of the overbought, was 2 bars later and had a blue background. So this is an actual trade here on the ES from 88.75. Okay. And there's no aggressive trades anywhere in here right now. Okay, there's no aggressive trades anywhere right now. Over here on the NQ, it's not in the oversold, but even if it did get down to the oversold, you wouldn't have a trade right here. Okay, even if it did get into the oversold, you wouldn't have a trade. It's got to move up and get away from the midpoint and then come back down and test the midpoint. It hasn't done that yet. Okay, the Russell, if it gives us a down close right here on the Russell, and that gets into the oversold by itself, that could be aggressive in 2 ways. There it is right there. It didn't go into the oversold though. Darn it. It should have gone into the oversold, but it didn't. It went flat instead. If that would have gone into the oversold, we would have had an aggressive long trade right here. In 2 ways. It would have been one aggressive trade because it ended on the midpoint. It opened on the midpoint when it went into the oversold, but it didn't go into the oversold. And the other one would have been aggressive because it went into the oversold by itself. But you didn't get either one of those, the way it worked out. You didn't even get the conservative trade because it didn't come out of the oversold. Alright? So you got nothing out of that. That stinks the way it came together there. You do have an aggressive short right now, though. You could sell the open at this bar right here, because the blue went into the overbought by itself. You could do that on the Russell if you want to right now. Getting back down to the midpoint. It should actually go up this much leg length. So that's a little risky because it should have this big of a leg length on that. Okay. So I'm waiting. It's 3:51. We have about 9 minutes left in here. Alright. Blue background, red background, blue background. So we're looking for long trades everywhere but the gold. Okay. And so far, 5 trades, and we're up $50 a contract right now, is where we stand at the moment. So it's been a pretty slow session so far. We almost have a trade here. Well, you could actually take an aggressive trade on the NQ, where the blue went into the oversold by itself. You could have bought the aggressive, and now it's conservative there too. So you have a trade on the NQ. Right? My stop is going to break even on that. I'm going to lock in minute 82. I'm going to lock in 6 points, 24 ticks right there. Okay, that's 24 more on the NQ. So you see how that could have been a couple of different types of trades, right? You could have been an aggressive trade right here. An aggressive trade right there when it went into the oversold. A conservative trade when it came out right there. When it came out of the oversold. Okay, now over here on gold. Let's see if it says timed alert. It says timed alert on it like that. That's not one of the newer ones. Alright, over here on gold, we have a chance for another trade there. We only have 7 minutes left, but we have a chance for another trade on gold. If we get the up close on this bar, we're already in the overbought right here. But if we get the up close on this bar, it'll go flat in the overbought and hit the midpoint. Then we'll be looking for a down close after that. There's a chance it could actually hit the midpoint and close down on this bar. Right? Yeah, it could actually hit the midpoint and close down on this bar. So that's a possibility too. Well, it can be very fast, but it doesn't have to be, Nilesh. You know, I think it's been kind of slow, really. I think this whole session has been pretty slow. You know, compared to what I do in the morning on most days, especially the first 30 minutes of the mornings, usually really fast. That's usually where I make all the money, though. You know, this month I haven't done it so much, but if you look at the number of ones, where I got the first goal for the day on the first trade, 1, 2, 3, 4, 5, 6 so far this month. So out of 16 trades, there were 10 days that I didn't. Last month, out of 18 trades, I only had 5 days that I didn't last month in the whole month. And I already have twice as many this month, I guess. Alright, so we're here at the midpoint on the up close. We need a down close right here on the gold. It's got a high of 2.1. The bar is red, so I'm not expecting that to change color on the down close. You'd be selling 1.2 on the gold right now. All these other ones are setting up too. The NQ is setting up. That one is the oversold by itself. I don't know if it's got a divergence trade there though, if I put that on. It looks like the blue went down and the red went with the blue on that, so it wasn't really a divergence trade there. So you gotta wait for the up close. Okay, on that, here it comes. There it is right there. Alright, stop's going to break even, and here it is. I'm gonna lock in minute 175. There's 4 points at 16 ticks. 20, oops. That's 24, oops. That's, where am I in at? That's 9 points right there, I think, right? No, 7 points. 7 points, 28 ticks right there. This is 45. This is 28. Let's see what it gives us right here. 28. Okay, this right here, what came out of the oversold right there, on the ES is a trade, I don't have that one on. The Russell, what am I doing with the Russell? Well, the Russell, did that have anything? It came out of the oversold right there. I can't tell if it came off the midpoint. It doesn't look like it did. I don't think it did. The gold, did I put that on? I did. Okay, so I'm short the gold right here too. The gold down close right there. And I don't think I should have put that at break even yet. I don't think I have a very good entry on it either. Now the ES up close right here is what you should have gone on. And this is now going to break even on the gold. I think I got that right. Yeah, there. 0.7 is right. I'm locking a couple of ticks on the gold. It should go down to 99.2 right here. 99.2. Okay, that is right there. So that would be 20 ticks if it gets down there. I have 2 locked in, and it should give us 20. This is not a trade here on the Russell. This is not a trade on the S, and this is not a trade on the NQ. Okay, so we're in at 0.2 over here on the gold. What did I get on that last trade right here on the NQ? I got 28 ticks on that, right? I gotta write that down. Alright, I'm gonna lock in 5 on this gold. And there's one more NQ and 28. Okay. I'm just gonna take 10 on on the gold. We're running out of time. So I'll take 10 on the gold. And that helps quite a bit. Alright, and there was nothing here on the S, nothing here on the NQ, nothing here on the Russell. And the gold, you could, if you're being really aggressive, you could buy this right here. I wouldn't do that. I think it's going to go down to the swing low right here. Being really aggressive, you could buy that right there. Okay, being really aggressive, you could short the NQ right here at the open of this bar. I wouldn't do that right now either. That NQ trade, it did work out. It ended up going fast when it got over here. It got fast. But at the beginning of it, seemed kind of slow. Alright, so we're oversold right here. And you could be aggressive and take that off the midpoint right there. You see the yellow arrow? So pay attention to the next bar. The next stop close could be the trigger. Or right here, because it closed right at the midpoint, you could have been aggressive and taken it right off the midpoint. That's usually a trade that I would take, but I missed it, so I'm just going to wait for the conservative trade, I guess. And the Russell doesn't have anything you can do here. Right, if I get rid of the div area on these things, so you're just looking at the blue. Again, I only put the div area on there if we're not getting any trades and I need to be aggressive so that we get something. Okay, this up close right here on the NQ. The conservative trade, did I get all of that? Yeah, it looks like I did. Hang on. Let me go see. Let me go and check my print and see. I don't even know if I put that on. I feel like I did, but I'm not sure. I did. Here it is right here. I will show it to you. I'll show you the print. Here it is. This is what I just did. The NQ. Bought 23,303. Sold 23,296. Oh, that's the other way around. Ha! Did I grab the wrong two? Hang on. Oh, I did grab the wrong two. That's why they were so far apart. That makes sense. Didn't I? No, I didn't. So I filled it. That I stopped out on something. What the heck is that? Bought at 303 and I sold it. So I lost 3.5 points on something? Okay, I lost 12 ticks on that. I don't know what that was. Why did I do that? Well, anyway, I did. I'll take it off. Why did I do that? I thought I made money on that. It looks like it stopped me out for 12 ticks. I don't know how I screwed that one up, but I did. Anyway, that should have been a good trade in there, but it turned out to be a little bit of a stop out for me. But I took it out of the totals. What the heck happened on that? I don't know what I did wrong. Anyway, well, this is just about it, guys. I guess I'm going to wrap it up on that one stop out trade there. So the way it's worked out now, there was this trade here that did make it into the oversold. It did make it into the oversold. It hasn't put in the lower swing. It needs to pull back up. The background is red. It didn't print the background color on this. I don't know what happened there. It didn't print the background color. This right here, I haven't gotten into the oversold to get another long trade on the Russell. The ES has got a red background, so you'd be looking for that to get up above the midpoint and then close down on the midpoint, but you can see the midpoint's not stable right there. Over here on the NQ, I don't know what I did to mess that trade up. Look at the actual time on that. The NQ, it was at 1958.58 and then 59.12. 58.58. Still a lot of bars trigger all at once right there. It's right here. Somehow I lost 12 ticks between an entry right here. So it filled right there at 3, and somehow it must have been when I went to trail my stop, I must have dropped the stop in the wrong place. Somehow I screwed that up and I lost 12 ticks on that. Alright, it's over here actually. It's right there. Because that was a valid trade. Anyway, this is where I'm going to wrap it up, guys. If you haven't taken a free trial with us and you want to, go to tvtrades.com. Click on any one of these orange things up here and it's going to bring you down to the bottom. And this is how you sign up for the trial. $25 a week, $9 a month, $9.97 a year. The swing trade stuff, let's go back to that really quick. If I go here to this, save on this. And I'll go to the swing trade stuff that is on this one. Alright, all these swing trade things, if you guys have any questions about this, you can email me, you can text me, you all have my number. Anybody that's active anyway has my number. And I said it was too late on the IQ, but I must have had something going on there. But I lost 12 ticks on it, Jerry. I don't know, maybe I put it on too late. Maybe that's what it did. I put it on after the fact and I just screwed it up. At the end of the day, I shouldn't even be trading right there on the end of the day like that. But anyway, I'm just flipping through these things. You can see that the swing trades in here. These are all the swing trades that we had for each one of these markets. If you look down here at the bottom, you see how there's multiple days down here at the bottom because they're swing trades. You know, they last multiple days sometimes. Like this one right here, triggered on the 21st, and well, that was at 10:20 in the morning on the 21st. And there wasn't another one until 10 o'clock the next day. And then that one didn't do another one until 3:20 in the morning the next day. So swing trades take time. That's why it took me so long to develop this thing, because you know I can't really do any forward testing like I do with this stuff in the morning really quickly, because you only get one trade a day, and so it takes a while to really see the results. But this is a really great product. If you guys haven't used it, you know, take a chance. Take a look at it anyway. Take a look at it. And I would suggest when you start out with it, start out with the micros, right? So you're not risking a ton of money because the stops are going to be bigger. Remember, the stop has to be the bar size plus a little bit more. And the target should be 1.5 or more of the bar size. Okay? That's what I'm looking at anyway. That's what I'm thinking. Alright, guys. So that's going to be it. I'm going to wrap it up here. It's been a pretty good meeting. It got a little more active in the end. It was really dry in the middle, but I was able to answer a lot of questions. So, yeah, I screwed up. I'm sorry I screwed up that last NQ trade. I did it at the last minute apparently, and I really shouldn't have done it at all. So let me fill out the spreadsheet for the Wednesdays. Here's the Wednesday spreadsheet. Okay, so today is 7/23, and on the NQ we're ending with 48 ticks. We were at a high of 60, but I screwed up that last one. On the Russell, we didn't have any ticks. On the Gold, we're ending with -5 ticks. And on the ES, we're ending with +8 ticks. So overall, $2,900 with 10 contracts, $290 with 1 contract. Number of trades, 5, 6, 7, 8, 9 trades today. Okay, and this becomes a 12. So we're averaging $382 a day with 1 contract, or $3,820 with 10 contracts just on the Wednesday trades. Alright, we're up $2,900 today with 10 contracts, or $290 with 1 contract. If I didn't stop out that last time, it would have been pretty good. It would have brought the average up, I think, $3,500 today. And that would have brought the average up instead of down. But but I did stop out, and I made that mistake, and I did stop out. And so that's what it is. Alright, yes. So those are the results. You guys all have access to this. If you want access to this, you can have it. You know, you can always take this and make your own. Once I give you access to it, you should already have access to it, but once you get it, you can just do make a copy. And then once you have your own copy, it's writable. Okay, because this will be read-only for you. But I will share this out to you right now. Copy the link, and I'll stick it out here. Okay, I will stick it out here, I think. Somewhere. I'm trying to find out how I can do that. Hold it. Window. Let's do not always on top. Not always on top. Not always on top. Not always on top. Bring that over here. Oh, what the heck did I just do? Oh man, I did it again. I just totally blacked out my other screen. Alright, so let me do this. Here is the link. You can do send to all on that. That's linked to this document. If you want to grab this document or make a copy of it, you can play with it and add to it. We're going to have to add some more rows on this. Insert one row above, insert one row above, insert one row above. If you guys have Sierra, if you have Sierra chart, or you're using Sierra DOMs, like I do, send me an email, because you don't have a problem yet, but you're gonna have a problem at some point. If you use StoneX and you're using the Sierra, if you're DOM like I do, you're gonna have a problem. Sierra closed a loophole that they had that allowed us to do it the way they were doing it, and now you need to use a different data provider. You need to use Denali data provider through them, rather than using the CQG through StoneX. Okay. Alright, that is really going to be it, guys. With that, I really am going to wrap it up. Thank you guys all for coming, and I'm going to stop the recording right here.